welcome to the trade on this Tuesday. Before we get into the charts, let's check what traders are watching out there today. China opening an anti-dumping probe into imported pork from the EU, seen as a response to curbs on its EV exports. US Supreme Court has agreed to hear a bid by Nvidia to scuttle a lawsuit accusing the chipmaker of misleading investors about how much of its sales went into cryptocurrency. Warren Buffett's Berkshire Hathaway has trimmed its stake in China's which surpassed Tesla last year as the world's largest seller of EVs, and BYD, I'm assuming that. Now, Vladimir Putin promising to build trade and security systems with North Korea that are not controlled by the West, in a letter published by North Korean state media ahead of his planned visit to the country. All right, let's get into the charts that matter. Peter McGuire joining us from XM on the desk today. Pete, welcome. Great to have you in the studio.
Oh, it's lovely to be here, Andrew. Good to see you.
Yeah, good to see you too. All right. So, big day.
Yep.
RBA decision with no change expected. Nonetheless, why don't we actually...
the coin, I don't think there's going to be any change.
All right, okay. Why don't we start, though, with what we can observe with how the Australian economy is tracking at the moment.
Sure.
What are we seeing?
Well, GDP is very, very weak. You've got inflation still relatively strong, and that's the issue moving forward. What impact it's going to have as far as Aussie dollar, what rate policy is going to be from the perspective as far as the RBA, and do we see any form of rate cut later into the session? And then when you're looking at the chart...
Oh, we'll get that chart back up, the economic indicators there.
Yeah,
yep.
It really changes the footprint as far as what policy is going to be leading into the August, September sort of timeline, that quarter. So it's going to be an interesting quarter leading up to the start of the fourth quarter and where the government plays, or where the RBA plays, as far as policy. And, you've got central banks starting to cut, Andrew, like Switzerland's demonstrated, and do we see another cut from the Swiss? And what's going to happen from Fed policy. So this is the changing dilemma. The Aussie's very, very range bound as far as a currency trade. Stock market's had it's had a good couple of months. You can't argue with that. So we're in a bit of a holding pattern, I'd say, for the situation.
All right, well, let's go to the next chart, just in terms of what we're seeing with CPI in particular and how the RBA is responding.
Well, that's right. I mean, when you're looking at the CPI numbers, I mean, that tells a story as far as what their viewpoints are, and you can't take your focus away from that because it's a forward-looking metric. You've got to be appreciative as far as what CPI is doing and your interest rate policy. And when you're looking at it, it's certainly falling, but probably not falling quickly enough. And I think the handbrake's going to be if you were to see higher energy prices, then that could impact naturally decision-making processes from the RBA. So as we roll forward, as I mentioned earlier, it's going to be a very, very interesting third quarter, how that all plays out, not only geopolitically, but more importantly, economically in Australia. And that footprint as far as trading, I always look at the trade, Andrew. I always look at the opportunity that presents itself as far as Aussie dollar. Are we going to see blowouts on either side? Do we see any downdraft as far as US dollar and how the impact of that plays?
All right, so let's check in on the Aussie dollar then, and from a trader's perspective, what you should be watching and how to trade it.
Well, I think first off, it's very narrow range. It's still around that 65 to 66. The chart tells a story, and it's offered some relatively good breakouts, but nothing dramatic over the last couple of months. It's been pretty much range bound. So if you're looking at option strategies, then you can look at straddles and strangles and all of that. If you're looking at straight out going long or going short, then it's probably... You're looking at your technical indicators, you're seeing is it above, and your RSI and all of those different indicators to appreciate opportunity and market moves. And this is the great challenge. Where to trade is the Aussie dollar the dynamic trade against the US dollar, or is it better to look at it against the pound or against something like the yen or the euro, for an instance?
Pete, if the RBA leaves rates on hold for the rest of the year, but we see other central banks, which are already beginning to cut,
yes,
but in particular the Fed, cut, that interest rate differential is going to close.
Yes, it is.
How's that likely to affect the Aussie dollar?
Well, the Aussie dollar would rally to the upside. There's no doubting that. I was just reading ex-Wharton Dean, Pat Harker, he's the Philadelphia Fed president. He's saying you'll see one rate cut in December. So there's the issue. When is the Fed, and we've got also an election consideration. Is it going to be in September or October? And October's probably too close from a Fed announcement with an election early November, or are they going to do it after the election? So that's the dynamic that's playing out, and I think that's one that traders need to be very conscious of, how that all plays into economics and, of course, currency opportunities.
Now, the RBA, not the only central bank making a decision this week, also the Bank of England's and the Swiss National Bank at the same time. What are you watching for there?
I don't think the Swiss are going to do a 1-2, Andrew. I wouldn't be surprised for that to take place probably in August, as far as another rate cut by the Swissies. As far as the Bank of England, I don't see any movement there in the short term, certainly at this meeting, and then that may happen later in the summer period. So again, possibly by August. They've still got very sticky inflation. We understand the economic hardship that they're going through and from a GDP perspective, but at the moment I feel as though that it's going to be pushed out further into that, that latter part of summer, Northern Hemisphere summer, that is.
Yep. Now, taking a look at Europe, goodness.
Where does one start?
Well, France, with the political uncertainty there, you could call it turmoil as it is at the moment. Very unclear as to how that's going to transpire. Certainly a big risk that Emmanuel Macron is taking at the moment.
Absolutely.
That parliamentary election. How is that, though, impacting more broadly on the euro?
Well, the euro's being sold off. Is Le Pen got the numbers to really carry anything forward? That's the issue, and that's going to be, again, fascinating how that plays out. The next side of it, of course, is the euro keeps on getting pressure to the downside. That US dollar's ticking up 105.50. I think the euro's got the potential to probably crater even further into the 106s, and even, some analysts are saying 105 in the short run, leading into that election, really under some significant softness. And it's, again, if you look at the indicators, Andrew, that offers some fairly interesting trading opportunity has been demonstrated over the last couple of weeks.
Yeah, so watch for that uncertainty, and certainly provides an opportunity to trade, as you say.
Yeah.
Pete, what's your favourite pair at the moment?
I like yen and US dollar, and I'll tell you why. Because I don't see any movement coming from the Bank of Japan. I think further softness is going to run it up to 160. I probably see some form of intervention from the Bank of Japan, so they'll probably snap it forward to maybe a 155, 154 when they start buying yen aggressively, because I think that that's the issue. And I don't see any rate policy. We saw that last Friday, so it's probably into July till we get 10 basis points. But the other side of it is, do we actually see anything happen in the short run as far as not only opportunity, but of course intervention?
And we did see from that daily performance chart there, gold it's certainly come off of late. However, longer term, what are you looking for?
Second half is going to be, I think, blistering. I think it's going to be very strongly bid up again with silver. Base metals have come off also about 10% in the last couple of weeks. Copper was at 10.6. Now it's at 9,600. Gold's been crunched down. So I'm not too worried about it. I think the second half and certainly into the fourth quarter is going to be very strong for bullion. Central bank buying is off the charts. China, the likes of what's happening in Turkey, huge demand picture. So I think overall it's a place to be, and the demand is very, very strong, both retail and of course central banks.
Pete, thanks for talking us through the charts. Thanks for joining CMXM.
Thank you very much, Andrew.
And that is the trade for this Tuesday.